Vincenzo's Go Crypto Investing this February the 27th, 2025. Daily cryptocurrency, XRP, and blockchain technology video from the #1 crypto insider on YouTube and in the fina at 7:58 p.m. from the great state of Michigan. We ask you to bell notification, comment down below, subscribe, most importantly, and share. And yes, become members of Jabroni Killers by just simply hitting that play button for $3.99 a month. It is an industry best value and cheapest to keep you out ahead of the market fluctuations, and you will not be surprised by the bull markets, by the bear markets, by the macro or micro patterns. If you are hitting that super simple and easy join button right there, and that lets you become members of Jabroni Killers. And then you can use my Robinhood links below and my Coinbase link below there. You see join Jabroni Killers, hit join if you're on my home screen, or you can trade on the sites that I trade, Coinbase and Robinhood, for all your crypto needs and trading options there. And that's how super simple and easy it is to become members of Jabroni Killers and to be 10 steps ahead of the criminal gangsters and the market manipulators. And one of the things that we do here when you're members of Jabroni Killers is you get the first access in primary in the comments and me communicating with you directly via me talking and by me reading your comments and then getting you what you need. XRP Ripper, he's a member of Jabroni Killers. He had a comment down here. Thank you for the super chat. Where was it at? Right here. Hello, Vincenzo. And you notice he's in his second month of Jabroni Killers because he has the man knifing silhouette, right? He's knifing and slicing and shysting the criminal gangsters with that knife there. And he says, I'm interested in buying ZRX/USD Zero Protocol. I find this coin really interesting. How low do you think it can go? I made a buy order at 0.162 bear market low uptrend. And this is one of the things you get. You get my undivided attention like that when you're members of Jabroni Killers. There's lots of comments. I try to look at them all, but I can only talk about so many different things. And if you're a member of Jabroni Killer, you get first access, and we'll take a look at ZRX. Let's make sure that's what he said. ZRX USDT protocol. Still don't want to buy you. And that is what we're going to look at here first on this evening's update. We have some news, too, that we want to read. This coin's been out for quite some time. I've never heard of it, so we're just going to... And you can use this as a free technical trading guide. Super simple and easy way to break down a price chart from old Vincenzo. Some of these other shyster programs charge you $50 or $60 for a class to learn how to break down a chart in a super simple and easy way. And we like to go into here, my toolbar, and we like to grab the fixed range volume profile, and it shows you for the range that you select where the heart and the meat of the volume is. And you can see right here, that red line that sticks out, that is the mean of the trading volume during the whole time where most of the trading's taking place. So we're going to make that red, and then we're going to lock that, right? And then that's the first thing I do. The second thing I do is I take my little rectangle. And right here, you notice how this candle right here is the biggest volume. Slightly more buy volume in green than sell volume in red. But it goes from about the 40 cents down to the 31. Then the next biggest candle by a long shot via the one that's below and all the ones that steadily decrease ahead. I like to take the two biggest ones and come across, and that forms my box of major support and resistance. And if you're coming from below it, it likes to act as resistance. And if you're coming from above it, it likes to act as support. Those are the big trading range volume boxes. And that's a major resistance box. And I like to do that. And I often put these ones in like a light blue. I change it up, try to keep it universal. We'll do a light blue on this. And now I know that's a major traded area, right? And then notice how it steadily declines up here. As you go even farther, the candle is just decline, decline, decline. Then there's a mini peak, and then it dies out way up there. And that shows, and this is why this is a major support and resistance range. And when you're below it, you're very bearish. When you're above it and holding it as support, you're bullish, right? And you can see we've run up a few times, but every time it gets a harsh sell-off. So then I like to go and find my next area where there could be major support, where we have support, support, support. Watch, if we put this right about in there, look at all that support. We have way back here in 2017 support, support in 2019, support in May of 2020, a conglomerate of support between November of 22 through September of 23 before we had a big pump, the start of a multi-faceted and leg big pump, right? So I like to do that, and we'll put that down here, and we'll lock that. We can't have another red. We'll have an orange there, and then it is locked. So now we got a base range between major support and resistance, right? And if we broke down past there on the way down, that would be bad, and that'd be a big price discovery where the price could really collapse, because we've had about 7 years of support down there. So then we like to come into here and get our price notes, right? This is going to be a very long video, so just skip around. I'll put in the description what I started with and where you can find things, so you don't have to watch the whole video. But there is, bam, right there. We're going to make that smaller. We'll correlate that with the orange. That's your major underneath support around that 17 cents, 16 cents right there. And that, yes, could be a buy area. But if you broke below that, price discovery could come 50% below the bottom, right? If you broke this after 1, 2, 3, 4, 5, 6, 7 different times, you could have from the bottom of this area of support, I mean, you could come way down to the bottom part of that candle right there. And there was a wick back there. See that? There was a big wick right at the beginning of that. You see that sneaky little double down there? That's why that one candlestick is. So if you did fail to hold support, your first target would be down there. And we'll make this a lot skinnier. Would be down here, clone, at 10 cents. So that would be about almost a 50% collapse if you fail to hold major support at 17 cents, because that is your all-time low down there at just above 10 cents, about 10.4 cents. So that's an area that I'd watch. And it looks like we're probably coming down here, or not down there, but at least coming to support. And then what I like to do is I like to put the moving averages on, but you can see they're all right up next to each other. And obviously the 50-day and the day, and I use the daily time frame, is down here. Make that a little bit darker at 36 cents. And we had the bearish golden cross where the red or the short-term moving average got below the 100-day moving average and now is below sufficiently the 200-day moving average. And that's a golden bearish cross, Jay. You know, Jay, it was a drizzly, rainy, gloomy day today, just like the cryptocurrency market, Jay. Right? And that's a bearish golden cross. And now if you are to find some support in the middle of this major support and resistance box, you would look at the 36 cents to this upper resistance that's just below that at 35 cents as major support. But right now, to me, the price action seems to want to come down to 17 cents. But if it fails to hold that, you could come all the way down to its all-time low at 0.1046, and you're buying at 0.16. So 0.16 is not a bad buy. I would even, whatever you have there, I'm not a financial advisor. If I was to do this, I would put some of my bag here at your initial price and then stagger the remaining buys all the way down to that 10 cents, just in case you wick down there on a big collapse or retest the all-time low. But I do think it's coming down to at least 17 cents, and I could see it come down to 10 cents here in the short to medium term time frame, right? And then there was some news. I wanted to read the Detroit Red Wings in a playoff race for the first time in a long time. There was some news here, And now this is another guy from CoinDesk getting on board of what old Vincenzo's saying. January bursting of a massive speculative bubble in meme coins by itself seemed good enough reason for the general crypto market sell-off. Decline sped up in a big way this week, in part to growing risk off sentiment in the previously perky stock market. Dow down more than 2% about 45 minutes before the close of the trade Thursday, the 27th of February. NASDAQ is now lowered by 7% over the last handful of sessions. Today's losses are being led by chipmaker following NVIDIA fourth quarter earning report last night is lowered by 5%. Sell-off in stocks came as many of the leading names were selling a lofty valuation after what seemed like months worth of unchecked gains. Toss in the mix President Trump's tariff threats, the latest being punitive levies against Mexico, Canada, and China to begin on Thursday. And the stage was set for the current consolidated correction. Maximum caution is warned. Founder of hedge fund, Quinn Thompson, founder of hedge fund Lucre Capital. Inflation data is coming in way too hot for the Fed to cut rates in the near term. Long-term inflation expectations are unencouraging to the upside. Big red flag, and now U.S. economic data is looking like the Trump bump was a dead cat bounce. On crypto specifically, there is no sugarcoating from Thompson. Every possible good news item imaginable has come and gone without much upward pressure on price. Investors have forgotten, but not old Vincenzo's followers, that bear markets are possible and what they look like. He's targeting 70,000 for Bitcoin by the end of March. So we have a guy now that's on our side, but old Vincenzo doesn't forget bear markets, and old Vincenzo, J, keeps his audience out ahead and 10 steps ahead of the rest of the field. And that's why we're the number one crypto insider on YouTube, because we keep it super simple and easy, fact-based, non-propaganda, and straight truth. Whether it's bullish or bearish, you will be out ahead, and you will be read the tea leaves before the rest of the field catches on. Just like we've had this head and shoulders topping reversal pattern now for several weeks. And so there should be no surprise as across the board now you'll start seeing other crypto influencers and insiders on mainstream media, local, national, and on the social media sphere start to figure out these patterns and start to understand what's going on. But you remember, you've seen it first here on Vincenzo's Gold Crypto Investing. Still don't want to buy you. And you can see the head and shoulders where we had a left shoulder top. And this is a macro pattern, head and shoulders in the daily, the weekly, and the monthly. We had our left shoulder with our big euphoric blow off top back in March. Then we had the down and sideways consolidation, which was the left shoulder being built. And then you have your neckline here at about 58,000, support, other than a couple of wicks down below. Then you had the big Trump-induced pump that started right as the head started to form on the breakout. And then we had that euphoric pump and rally with a double top on our first top on December 14th, a double top on January the 17th, which forms an M topping or double topping reversal pattern, where you have your local neckline right here, where the blue line is at about 90,000. Targeted move would be from the top of this double top to the neckline, which is this line right here. Targeted move brings you down to 75,993.26, or that 74,141, which is the previous blow off top from the left shoulder, which would be a logical support level, and which would bring this moving average from here and have the first bearish cross and bring it down to about here. And this would be a good spot for a brief rally to come up to the 200 in the daily, or the down sloping 50 that would be running in and around here, to tank it to give you all the way down to form left side of the head, to form the right side of the head, just like you've seen in XRP. And then we could have a nice rally that would pop back up here to form the right shoulder, but you stay out ahead of this, and that's why you follow this station, because you can't get this information anywhere else. But this is, in Bitcoin, it takes a longer time. This could be a 3 to 6 month pattern from where we're at now for a complete breakdown. And the targeted move would be from the top of the head to the neckline to the point of a breakout, which is this line right here, brings you down to 32,366.05. And that's what old Vincenzo's looking at right now in the micro time frame, less than 1 year time frame, short to medium term, and the Bitcoin price. So you're out ahead of that, and there should be no surprises for anybody here in this audience. And that's what old Vincenzo strives to do, is to keep you updated and to keep you out ahead of the game. Just like now across the sphere, you're seeing this pattern that we've had drawn up here ever since we were back here in mid to early January. Before any of that happened, we were right about here, just after this 340 top, somewhere between, if you go back and look at the videos from about the 12th of January through about the 20th of January, we put this pattern up and have left it there ever since. We usually do that when we're not talking about it, but since we're talking about it, we'll bring it into the forefront. But this is the head and shoulders topping out reversal pattern that we were letting you know, and I've seen it across the sphere now, that everybody is on top of the pattern because it's telegraphed in itself and showed itself, so it's easy to diagnose when it's already there. But remember, old Vincenzo diagnosed this pattern when we were right there. That's all the price action that we had when we put up this pattern and said this could be potentially, and what probably is, a short to medium term topping out reversal pattern. And that's the power, and that's the insight, and that's the value right there that you get from old Vincenzo. And now if you look at how the months played out, we've left the pattern on there, and you can see we dipped down to the neckline and we formed a right shoulder. This right shoulder might not be done yet, but it's getting very close. It could still pump back up a little bit, but on a technical breakdown, you would go, and how you do this would be from the top of the head to the neckline, which is right here. Essentially, it ended up being the $2.09, where we drew this potential neckline back when the pattern was only right here. And all this was speculation, because all this at the time was the future, J. And this is, again, what this channel does in the education of the technical analysis that we get here, and the value. And this is the true value, that we show you the patterns way out ahead of the mainstream, the social media influencers. Before they figure it out, we already read the tea leaves and give you that heads up, or the head start that you need to be out ahead of where the trading's going to be, because we already are speculating and seeing what the pattern probably is, and we don't change what we're looking at until the pattern breaks, right? We go on the long term, the daily time frames, the weekly, the monthly, right, to figure out where the pattern is going in the short to medium term. And on a technical breakdown, you can see we already hit just above the 200-day moving average. But the technical target down here on a breakdown of the head and shoulders is $1.29. And then if we get rid of that right there and we go look at what we got going on, you can see the 200-day moving average now, or the 50-day moving average, is sharply declining. It is down now to 252. The 100-day moving average is ever so slightly come down to 227. And the 200-day moving average is trading parallel and will be coming down, but this will have a bearish cross where that red shoots below the blue, or the 100-day, probably within the next 7 days now. And the price is threatening, and more than likely, before a bounce is attempted, is coming down to the 200-day moving average at roughly $1.79 in the next few days. And then we could try to see a little bit of a bounce here in the XRP price. But as high as I think you could go in this right shoulder, I think you would get rejected if you pump back up to about the $2.51 level. Another XLM, again, the value of Vincenzo's Gold Crypto Investing was, we diagnosed at this 63 cents right when we were in there in early December, very late November, after that grayscale filing, that we could potentially be in and probably we're in a short to medium term bearish trend. And we've continued that thesis as long as we've been below this 43 cents and have not confirmed above it since we broke below it. We had a brief fake out for about a week to 10 days to the upside on the new year, but we identified that out ahead of the field, and the rest of the sphere didn't catch on until we were about right there at the end of January, that this had some bearish downside. But we've been telling you that ever since we were way back here in late November and then the first week of December, and then we had a 50% pullback, and then we told you on this relief rally that this was more than likely just a telegraphed bounce back in an exhaustion pattern to the downside, where we have a downside pressure of 18 cents, and you can see we've almost now had the bearish cross again, something we've been forecasting for quite some time, where the 50 is accelerating to the downside and it's down to 35 cents. And you can see back where we peaked out, it was just under 41 or right on 41 cents. And where within the next 3 or 4 days, we're going to cross under this on the daily video. And we're going to say, see, the forecast played true. And we did have a bearish cross. And then eventually, I think we might have a golden bearish cross in the XRP price, where XRP gets the 50-day moving average in the daily gets below the 200-day or the long-term moving average, and that would be the catalyst that drives you down to 18 cents, because I could see you come down to 25 cents or maybe a little bit lower, have a return rally to get rejected by the then moving averages with the bearish cross, and then that drives you and forces you down to that 18 cents. Like, subscribe, and share. If you got any value out of this video, become members of Jabroni Killer, or just comment and like the channel and share it, or super chat J to support the channel. Peace and love to your profitable trading.